SoFi stock has been on a huge run over the past few weeks. In fact, the stock is up over 25% since I made this video last month, where I went through why the stock is such a huge opportunity and why I was loading up on SoFi stock. SoFi stock hit over $8 this week, for the first time in nearly 6 months. But the important question now is, can this rally continue? And in this video, I'm going to look at this in detail. Not only do we have upcoming catalysts, but I have one major warning for all SoFi investors as we head into September. If you follow the stock, then you know just how much SoFi is growing. But with rate cuts almost certain to begin next month, and fintech expected to become a $1.5 trillion industry by 2030, could SoFi be a millionaire maker stock to buy now? In this video, I will try to explain what is going on with SoFi and what we can expect in the near future. Now, we've got a lot to get through in this video, so I will try to keep this intro short. But if you find any value in this, can I ask you to smash the like button? It literally costs nothing, but it helps me out so much. I'm aiming to get 500 likes on this video. Help me hit that goal. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. I want to point out that I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Now let's get straight into it. First of all, as we all know at this point, the Fed is more than likely to cut rates next month as inflation cools. The Fed next meets in mid-September, 6 weeks before November's presidential election, and then again shortly after the vote before a final meeting in December. The Consumer Price Index report released on Wednesday was a very positive sign according to Fed officials. Then there is the fact that fintech is projected to become a $1.5 trillion industry by 2030. The fintech sector currently holds a 2% share of the $12.5 trillion global financial services revenue. It's estimated to grow up to 7%, of which banking fintechs are expected to constitute almost 25% of all banking valuations worldwide by 2030. In 2022, fintechs on average lost more than half of their market value, but according to the research, this plunge should be considered a short-term correction in an otherwise long-term positive trajectory. So given the huge opportunity in such a huge industry, this leads on to a very simple question. How well is SoFi really doing? The stock might be up over 25% in the past 3 weeks, but the stock is still down 17% since the beginning of the year. Now, if we look at the investors presentation for just a moment, we can see the new member additions has been steadily increasing quarter after quarter, as too new product additions and the number of Galileo accounts. In fact, there has been huge growth in lending products and financial service products over the past few years. Everything is pointing upwards for this company, but the share price does not reflect this just yet. In the last quarter, there was a slight drop in quarterly adjusted net revenue and quarterly adjusted EBITDA, coming from an insane increase the quarter before, and management has been very prudent with lowballing guidance for the coming earnings report. Now, the last time I did an earnings preview video on SoFi, I was spot on with my predictions on all the growth figures as well as the revenue and EPS prediction. If you would like an earnings preview over the next couple of days, then drop a comment below and let me know. If I get 500 likes on this video over the weekend, I will make an earnings preview on Monday. Is SoFi Technologies a millionaire maker? First of all, SoFi stock has declined due to valuation, not business performance. The company could grow for many years on 3 key catalysts. So could SoFi be a millionaire-making stock hiding in plain sight? To explore this idea, we're going to break this into some major key points. First of all, people love SoFi's products and services. SoFi is primarily a digital bank, which means it operates online and doesn't have physical branches. Customers bank through the website or SoFi's app. Users can deposit, spend, and save money, invest in stocks or crypto, open a credit card, apply for various loans, monitor their credit, and learn about financial topics all within SoFi. Now, as I've said many times before, this makes banking with SoFi convenient, and it's a great cross-selling model that generates more business from customers as they use the app more. SoFi are building on their existing customer base, but then offering more products to those customers to grow their profits at very little extra cost. This generates more revenue and strengthens customer loyalty. But then it makes it more convenient for customers to be able to do more things in one place. It really is a win-win for everyone. And it's clearly working. As we've already seen, new member additions is growing every quarter by more than 40% for the past 4 years. In fact, in that 4 years, SoFi has gone from just over 1 million members to nearly 9 million members. The app has an average of 4.8 stars out of 5 on Apple's App Store, based on more than 340,000 reviews, so it's clear that customers are more than happy with SoFi. And this is a very good point here. It's not as if the population has expanded eightfold in the past 4 years. This is not population driven. It should be clear that people are leaving other banks to use SoFi. Which leads us on to point number 2. Can SoFi growth last for years? And this is really simple. As long as SoFi continues offering a great product and effectively communicating to the market, there's no reason SoFi can't continue growing. The population of the US is more than 340 million people. SoFi has less than 9 million members. That's only a 2% market penetration. There is unbelievable scope for growth here. For example, back in 2014, during a JP Morgan Chase data breach, the accounts of over 83 million customers were compromised. That's 10 years ago. And the big bank had more than 10 times the amount of customers that SoFi has now. If you look at European banks, Santander has more than 165 million customers. At less than 9 million, SoFi is just at the very beginning of its growth. But SoFi could generate multi-year growth with 3 distinct catalysts: customer expansion, customer engagement, and deposit growth. As I said already, SoFi is increasing its customer base by over 40% constantly. But this won't last forever, but it does not need to. Think about this. When SoFi had 1 million customers and they increased by, say, 80%, that brings the total up from 1 million up to 1.8 million customers, an increase of 800,000 customers on 80%. But now SoFi has nearly 9 million customers. An increase now of just 10% is now 900,000 new customers. But SoFi are still recording growth numbers of 40% plus. This is a point in time that compounding growth will lead to everything really taking off. The other point here is about customer engagement. As I said already, don't underestimate the cross-selling opportunities that can lead to exponential revenue growth. There is massive possibilities with this. And as for deposit growth, another interesting thought, SoFi roughly has $323 billion in deposits as of Q2. The average customer has $2,600 with SoFi. There is growth potential as generational wealth shifts from boomers and Gen X to millennials and Gen Z, and that money trickles into SoFi as investments, savings, and more. Now, as I said at the beginning, I have a major warning to all SoFi investors, and to be fair, this warning also goes for most of the market. August is now finished and the S&P has recorded its 4th winning month despite huge volatility. At the end of August last trading day, all 3 major index notched wins for the month, overcoming earlier losses. And these losses were significant. Nasdaq dropped over 13% in just 5 weeks, but then recovered strong. However, as we move into September, we have to remember one thing. September is historically bad month for stocks. We can see it when we look at the charts over the past 5 years, but this is not just a recent thing. Since 1950, the S&P 500 has generated an average loss of 0.7% in September, making it the worst month for stocks on average return and positivity rate basis. In fact, the last 4 Septembers have been notably weak, with the index posting respective declines of 4.9, 9.3, 4.8, and 3.9%. Now, you might be thinking that drops of 3 or 4% isn't bad, and for a single stock it's probably not that bad, but for an index as a whole, 4% is a significant drop. But looking specifically at SoFi, over the past 2 years, September-October has seen the stock suffer major drops. From mid-August 2022 until the end of September, SoFi dropped a whopping 40%, and it didn't begin to recover until January. Again, last year, from a high point in August, SoFi dropped around 30% over September and October. So this is my warning to investors. September is not a good month. Just look at the data. Going back to 1950, that's 74 years of data, September is the worst month in stock market history. And to back up this idea, if you've been watching other SoFi videos or reading up about other major tech stocks, you'll probably have seen people talking about a huge short squeeze going to happen soon because shorts have been increasing. I've seen this with SoFi and with a few other stocks. But history suggests that September is not a good month to be betting on short squeezes. So importantly, is SoFi a Millionaire Maker stock? And this is a question that seems to annoy a lot of people because there is an awful lot of people that are down a lot of money on SoFi. You know, the stock is down about 75% from its 2021 high. And if anyone followed my channel back in 2021, I was not bullish on SoFi as I thought that this was an overvalued company based on the numbers. But now the numbers make sense. This is no longer a loss-making company with small revenue and a small customer base. SoFi is growing and they are consistently proving the doubters wrong. Today, SoFi's price-to-book ratio is in the mix with America's mega banks. They are more established than SoFi but lack the growth potential. The valuation is now sensible enough that investors could realize much of SoFi's future growth as investment returns. Management expects book value to increase by $800 million to $1 billion this year, roughly 20 to 30% jump over last year. SoFi's valuation is small enough that years of consistent high-speed growth could make long-term investors very rich if they're patient enough. And just one last point here I want to make about patience, looking at Nvidia. Nvidia's growth was so slow for such a long time. From 2014 to 2017, it was barely 50%. Again, from 2017 to 2020, barely 50%. But then over the past year, there has been exponential growth. It took years of patience to get to this point. And now you see all the posts online of people saying, I wish I bought Nvidia 5 years ago at say $3 or 10 years ago at say 50 cents. I'm sure that there are people who bought Nvidia back in like 2004. And by 2014, they were barely up 90%. Yet by 2024, they are up over 300,000%. Now, I know this is off topic, but I just wanted to make a point about patience. Because I can guarantee you that there was a lot of people that laughed at anyone holding Nvidia stock who were saying that this was going to be a millionaire maker. So what do you think about this? Are you bullish on SoFi stock? Or did you let bearish sentiment over the past few months affect how you think about SoFi? There is always a lot of talk on social media about SoFi, but always do your own due diligence. Remember that I'm not a financial advisor and this is not financial advice, so always do your research. But if you enjoyed this analysis, then please like and subscribe. I hope you make a load of money on this stock. Follow me on Twitter and I'll catch you in the